Hey, ladies and gentlemen, are you getting excited on real estate investment trust? Yes, the quarter that just ended, that's end of March, is the first quarter. The first quarter where REITs posted positive returns after 4 terrible quarters of negative growth last year. So aren't you getting excited about it? Well, in this week's video, as well as in this month's publication at GCP Global website, yes, do look at our GCP Global website, where we have consolidated our last 34 years of experience into very detailed research, as you can see over there. It's free, and go enjoy it and have a thorough analysis of the data that empowers REITs and therefore your profitable portfolio going forward. Now, in this month's article that we have actually just dished out fresh from the oven for this particular month of April 2023. Now, we are saying that REITs have finally eked out potential positive returns last quarter. Now, this could possibly mark the turnaround finally after the October lows that we saw in last year. Now, let's go through our article, which we have just published. Now, you saw essentially, now this table 1 actually shows that the peak on the REIT market was on the 3rd of April 2022, where the index actually peaked at 873. And then the lows was seen on Friday, 21st October, when the index hit 663. So essentially, the worst market conditions last year for real estate investment trust was downdraft of 24%, by far, over a period of 6 months, the largest correction outside the global financial crisis kind of conditions that you saw way back in 2008, as well as the COVID-19 crisis that you saw way back in February of 2020. Now, this table 1 actually shows the top 10 best performing REITs in 2023. And for those of you who have been attending GCP Global classes, you notice that all these 10 REITs from Keppel DC REIT, which actually posted a positive return of 16% in just 3 months, through Frasers Commercial and Logistics, the Frasers Centrepoint Trust, which is the 3rd best performer, up 9% for the first quarter of this year, as well as the Mapletree Family Class of REITs, that's Mapletree Pacific Trust, Mapletree Logistics Trust, Mapletree Industrial Trust, all up between 7.7% and 6.7% in the first quarter of this year. Ames APAC REIT, that's up 6.45% in the top 10 best performing REITs for the first quarter of this year. Parkway Life REIT, some REIT that we've been pushing all this while, Paragon REIT, as well as Capital Land Centers REIT, which I actually met. It's head of IR, that's Miss Yao Kit Pink, who is actually happens to be my ex-colleague at Summit Securities way back in 2004. I met her and the management team just last week at Capital Land Centers REIT. You notice that all these REITs were highlighted in our various classes, as well as for those who have been subscribing and following our YouTube videos in the last 1 year. Now, these stocks were all mentioned and talked about and pushed in our classes actively, because we want to position you into REITs before the prices run out. And as you can see in the first quarter, this has proven to be prescient. Now, you notice, ladies and gentlemen, the best performing REIT for this quarter is actually Keppel DC REIT. And you can see, ladies and gentlemen, in this lunch appointment that we had with Miss Antia Lee, she's the lady in white. She's the head and CEO of Keppel DC. You notice that since we met her middle of last year, we've been pushing for Keppel DC REIT, and true enough, when the share price went below 180, students of GCP Global had a feast on the stock at below 180 because the share price have actually shot up, from 180 right now to 2.06, or a big gain of a 16.4% in just 3 months. Not even counting the dividend, which actually recorded record high dividends. Now you notice that one of the intrinsic analysis that runs through all of the stock performing REITs is that you are finally seeing positive DPU return on a year-to-year basis for Keppel DC, the likes of Frasers Centrepoint Trust, possibly Maple 3 APAC Pacific Asia REIT for this particular year compared to last year. Now, once it's set on a positive uptrend in the DPU, you can see you will be able to continuously enjoy the incremental return because, as we've mentioned many a times, DPU powers the growth in the REIT prices. Now, the second picture that you have, ladies and gentlemen, is our latest launch last Wednesday, to be exact, at Robertson Quay with Mr. Russell Ng, who is the CEO of AIMS APAC REIT, which ranks as the seventh best performer in terms of REIT for REIT in the first quarter of this year, as you can see in table 1, as well as Ms. Cheryl Sim, who has just joined this particular REIT. It's a wonderful catch-up. It's actually the second or third catch-up that we have since Mr. Ng came into the CEO post. And as you can see, ladies and gentlemen, for sure, for GCP Global investors, we are always keeping them abreast, latest development on what's actually going on within the REIT itself. In this case, AIMS APAC, Keppel DC, the Maple 3 group of REITs, Frasers Centrepoint Trust, Fraser Commercial Trust. So it does not come as a surprise when they actually outperform. But more importantly, we're able to actually tell you and help you to position way before these prices go up. So if anything, our write-up that we have mentioned, for you to enjoy, that kind of return, investing in REITs is all about picking the right REITs for your investment portfolio, as what we have highlighted in our latest article. If anything, let's go through the 10 worst performing REITs for the first quarter of this year. And this would not come as a surprise to you, for those of you who have been following GCP Global past 1 year of videos on YouTube. Thanks for subscribing and supporting our channel. The 10 worst performing REITs rank from Lippomalls, Prime REIT, Manulife REIT. All of them are down between 28 to 44%. Then you have EC World REIT, Digital Core, Keppel Old REIT, all of which are down between 17.39% to 28%. And to make up the rest of it, it actually includes Elite Commercial REIT, ESR Logos REIT, Daiwa House Logistics Trust, OUE Commercial REIT. For those of you who have been following us all this while in our YouTube videos, you can see in past YouTube videos we have warned before the prices even go down further, a few things like what are the the worst performing REITs in the first half and are likely, first half of last year, and likely to continue to assert its strength in the second half of this year. Our second video talks about how to survive in a bear market in REITs, which was last year. And then 8 months ago, after warning a year ago, we talked about the crash of Digital Core REIT before its share price continued to fall. And we questioned whether US office REITs were value traps. A year ago, before, they actually turned out to be value traps, as you can see, because 3 out of the 10 worst performing REITs in the first quarter are all US office REITs. Then if we look further, we actually talk about the 2 IPOs of 2021, Digital Core REIT, as well as Daiwa House. We caution investors about investing in them, because as you know, in any IPO, all the bankers, the touters, even the media get frenzied up. But really, who does detailed analysis of the REITs? Well, at GCP Global, we go through the financials in detail, present it in our class, and we actually then help you to actually decide whether you should or should not invest in these REITs in a big way or a small way. After all, ladies and gentlemen, the whole idea of investing in REITs is what we have highlighted in the article. And once again, it has proven that what we have been teaching and emphasizing in our REITs classes, as well as our YouTube videos, that the headwinds, need not turn for REITs. You're still seeing higher interest rates. After all, the Fed is actually still guiding for at least maybe one more. But markets and the REIT markets, the turning point may already be seen, because all you need is not that the negatives like interest rates, CPI, core production numbers have to turn positive. They only have to become less negative. And that's enough to power the REITs market upwards. So for those of you who, you will notice, essentially, when we were interviewed in our Business Times article on Friday, 21st October, or rather Thursday, 20th of October last year, we mentioned that the REITs were already selling at valuations, where it's blurred on the streets. And you notice the next day, that's Friday, 21st of October, is where the REIT market hit a low of 663, as you can see from the chart that we have showed you earlier. So you can see, ladies and gentlemen, well, you may say it takes luck to be lucky and be precise, but if you continue to be precise and accurate most of the time, I think it boils down to a fair amount of experience, and we have 34 years of experience teaching and educating and sharing, as well as basically the skill that's actually required. So once again, hope you enjoyed this week's video, and watch out for the wonderful ride for REITs, Real Estate Investment Trust, after one full year of drastic underperformance. So have a great second quarter, and looking ahead, once again, subscribe to our channel, and if you feel like it, do come quickly to sign up and enjoy the early bird special for our next class, our next quarterly REITs class on May 27th of this, and so basically it's in less than 2 months' time. Once again, adios.